Hello and welcome from KBM TR, AAT approved learning provider. We have been helping thousands of students passing AAT with flying colors. This video is about learn accounting in just 60 minutes. Yes, you heard it right. 1 hour, you learn full accounting from how to remember debit, credit, accounting equation, balance sheet, DBT accounts, trial balance, profit and loss statement, and state financial position, all in one. In this particular video, we're going to talk about stages in accounting. If you are an accountant or bookkeeper, let's assume you're a junior accountant, accounts assistant, or bookkeeper. Your boss has given you so many sources of documents, and the sources of documents comes from transaction. From transaction, you get sources of documents. What are those? Could be a sales invoice, purchase invoice, credit note for sales return, purchase return, and bank documents could be. So the first step is financial transactions, then sources of documents. From sources of documents, you record in day books. We call it books of prime entry, or day books, also call it journal. These days, yeah, sales day book, purchase day book, sales return, purchase return, cash book. Then the general journal is there. From the day books, you make ledger accounts, means T account. It looks like T, the t-shirt, the polo t-shirt I'm wearing here. From the ledger, you prepare trial balance, and from trial balance, you make final accounts, which is P&L and SOFP. Over the next videos, we're going to see all these items. In this particular video, we're going to talk about accounting equation. Before that, you need to know your business is separate from the owner. This is called separate entity concept. Like if you're buying his business as purchase, if you're selling his business as sales, you're taking loan, business liability, putting money into the business getting money, not the owner. That is separate entity concept. Now, talking about accounting equation, assets equals to capital plus liability equals to C plus L. You can always change it, asset minus liability equals to capital. For example, if my assets are, let's assume £500, equals to capital, the money input by the owner in the business, and he took 200 loan from bank or friends or family could be. So that makes you 500, right? Also, you can play around like this. 500 minus liability was 200, isn't it? Your capital is 300. Yes, that's how you do asset equals to capital plus liability, or asset minus liability equals to capital, asset minus capital equals to liability. I would like to show you one quick example of 3-storied building. GF, yeah, not the girlfriend, ground floor, first floor and second floor. I'm using quite a few gadgets in front of me. Let's assume Dell computer. Dell, yeah, this is the Dell building, 3-story building. The ground floor is production. Let's assume production. They have heavy machineries there, yeah, and it's a little oily and blackish. The first floor is admin, sales and admin. This is pristine, clear, nice. Office rooms are there, reception there, yeah. And second floor is let's assume finance, yeah, and accounts. So in every floor you have assets, don't you? Machineries could be computer, could be fixtures and fittings, furnitures, and all these assets. Let's assume we said £500. That is that. Of that, owner put some money and owner took some loan. That is liability. Would go a little more over the assets and liabilities. Assets, items owned by the business, which you own. It could be non-current, it could be current. Non-current, held in the business for more than 12 months time. Fixed asset, non-current asset, long-term assets like land and building, motor vehicle, office furniture, and current asset, which is utilized or held in the business for less than 12 months time. 4 or 5 popular examples: cash money, bank money, trade receivables, closing inventory. Yeah, these are your current asset. Liability, owing by the business. It could be again current and non-current. Non-current is a long-term liability held in the business for more than 12 months time. Could it be bank loan, right? Mortgages, right? Yes. Current liability should be settled within 12 months time, mostly bank overdraft and trade payables, or could be any loan which should be settled within 12 months time. Couple of more items, then we end the video here. Capital and drawings, yeah, capital, money injected by the owner in the business, and drawings, money withdrawn from the business by the owner for his personal reasons. So that's your accounting equation, and that's your 5 minutes of this video. Check out our next videos and learn accounting in just less than an hour.